Yes, students, we will begin the income tax revision with the chapter 1, which is an introduction chapter. In this chapter, we would be covering the various basic concepts of income tax. But let us not ignore it because in the exams, questions would be asked even on chapter 1, guys. In page number 1 of my revision material, I have given the list of sections of Income Tax Act, but I will come to it little later. Let us begin with chapter 1. Topic number 1 is tax, guys. Tax is a compulsory payment which every citizen has to make to the government, whether it is direct tax or indirect tax. Now, why do government collect taxes from the people, sir? Guys, the major sources of revenue to the government is tax, and they will use this money in order to meet various public expenditure like health, education, infrastructure, or even public security, or even as of now, there are various government schemes which they are offering to the general public, for which the government has to incur crores together. But where do they get that money from? The tax collection. In addition to this, even government would have made various investments on which they would be earning the return in the form of rent, interest, dividend. But the major source of revenue for whether it is a central government or state government is from tax collection, guys. And we have two types of taxes, that is direct tax and indirect tax. Sir, what's the difference between direct and indirect tax? In case of direct tax, the impact and incidence is on the same person. Sir, what is that impact and what is incidence? Guys, incidence means the liability to pay tax, whereas the impact means the burden of suffering the tax, means who ultimately paid the tax. For example, income tax. If I am the person who has earned the income, I have the liability to pay tax, and ultimately I am the one who has to pay it. Can I ask you to pay my income tax liability? Definitely not. Even if I ask, you guys will not be able to pay it, or you will not agree to pay it. So income tax is an example for direct tax. Whereas under indirect tax, the impact and incidence will be on two different persons. Incidence means, as I already told you, the liability to pay tax. Normally, it will be on the supplier. But can they shift it to the recipient? Yes. GST is an example for indirect tax where the liability to pay GST is on the supplier of goods or services. But can they charge and collect it from the recipient? Yes, they can do that. And they have all the power to do it, guys. If they fail to do it, for example, if supplier doesn't collect tax from the recipient, then the supplier will end up paying tax out of his own pocket. Yes, GST and customs duty is an example for indirect tax. Yes. Now coming to the Constitution of India. We are not covering the entire Constitution. Guys, actually in India, the mother law for all other law in India is Constitution. The power to make any law in India has to be given through Constitution. Now, if any government has to charge or levy and collect a tax, first for them, the power has to be given by whom? By the Constitution. Yes. So there are few important articles with respect to tax. What are those? We will see now. So in the first line I have mentioned, you can see the authority to levy a tax is derived from the Constitution of India. Let us first understand what it talks about. We are not covering the entire Constitution as I already mentioned, guys. Only few articles of the Constitution which is relevant for our tax purpose. Article 265 will tell no tax shall be levied or collected except by authority of law. Now, tomorrow, all of the sudden, Modi ji felt that let me levy a new tax to the people of the country. Can they come forward and do it straight away? No. First, they have to derive the power from the constitution. They have to make the law with respect to that. Only then they can start levying the tax. Yes. So, firstly, to levy and collect any tax, the power has to be given in the constitution. Then Article 246, which is important, distribute the legislative powers, including the taxation between the Parliament of India and state legislature. Means the Article 246 will tell or they will distribute the power to various state governments and central government. Who has the power to make which laws? And there are three lists in Schedule 7, which is a part of Article 246. There are three lists, which are those: the Union list, the legislative list, which we also call it a state list, and the last one is concurrent list. And whatever matters are covered in union list or central list, only the central government has the power to make laws with respect to this. And income tax is a part of it. Given below in blue color, you can observe entry 82 of the union list, that is list 1, in the 7th schedule to article 246 of the Constitution of India, has given the power to the parliament to make laws on taxes on income other than agriculture income. So who has the power to make laws with respect to the tax on income is the central government. But this list excluded the income on agriculture, means tax on agriculture income. Why, sir? This power is given to state government, guys, under the state list. But no state government has used this power to levy tax on agriculture income, because they are also knowing that, they are also aware that if we levy tax on the agricultural income, then we will lose the power. So that is why in any state in India, the state government has not used the power. It is actually given in the legislative list or state list. But as on today also, no state government is levying tax on agriculture income, guys. So agriculture income is completely exempt in India as per section 10 clause 1, which we will cover later. Okay. Then coming to the legislative list, whatever matters are contained in state or legislative list, the state government, that is the respective state government, will have the power to make laws with respect to this. And the last one is concurrent list. Both central government and state government will have the power to make the laws with respect to the matters contained in concurrent list. But if there is any conflict between the central law and state law, then the central law will prevail, guys. And coming to the administration, under the Ministry of Finance, which comes under the central government, we have a Department of Revenue, which has two wings. One is for direct tax, the other one is for indirect tax. For direct tax, we have an administrative body called CBDT, Central Board of Direct Taxes. Under that, for income tax purpose, we have Income Tax Department. Coming to the other side, we have CBIC, which is an administrative body for indirect taxes in India. The full form of CBIC is Central Board of Indirect Taxes and Customs. Under that, for GST purpose, we have GST Council. Any decisions with respect to GST will be taken by GST Council, which is headed by the Union Finance Minister, which is our madam now. Then coming to the income tax. Income tax is one of the major sources of revenue to the central government. The power to levy and collect the income tax in India is with central government. This tax is the major source of revenue to the central government, guys. And it is levied once in a year, not every month, because GST is levied and collected every month, whereas income tax is levied and collected once in a year. Got it, no? Yes, because after studying indirect tax, you should not get confused with income tax. Anyway, we will take up the indirect tax later. Components of income tax law. There are various components of income tax law. The first major important thing is Income Tax Act, guys. It is like a captain of the team or the hero of a movie. Then it is also accompanied by Annual Finance Act, income tax rules, circulars notification, and legal decisions or the judgments of various courts. Yes, we will see each one of them in detail now. Income Tax Act 1961. Guys, one important thing I would like to tell you is, see, already new Income Tax Act has been implemented in reality, but that is not applicable for your exams. The new Income Tax Act will be applicable only for the exams to be conducted in May 2027 and onwards. So you need not worry about it as of now. Okay. Income tax in India is governed by the Income Tax Act 1961, which is amended from time to time through Annual Finance Act, or we also call it as budget. This act came into force in India from what date? April 1st, 1962. And this act has various section, subsection, clauses, explanation, proviso. Sir, what are those? We will understand in simple, guys. Now, first clause. When each part of the section is independent of each other and one is not related with the other, we call it as clause. And in income tax, we have section 2, which defines various terms used in the law. And we have section 10, which talks about the exemptions, that is general exemption under the income tax law. Both of this section have clauses, guys. For example, section 2 clause 1a defines agriculture income. If I just refer to this clause, I will understand properly what is agriculture income. Sir, should I refer to any other clause or subsection? No. Same way, section 2 clause 7 defines assessee. If I just refer to this clause, it is enough, guys. I will get the complete picture about who is the assessee. Okay. Then coming to the subsection, where each part is related with the other. They're dependent on each other. We call that as subsection. And subsections also may have various parts, guys. Yes. Now let me explain this with an example. Guys, section 5 of Income Tax Act talks about scope of total income. And it has two subsections, section 5.1 and section 5.2. Only when a person knows an idea about both this section, I can clearly tell what income is taxable in India and for whom. Sir, if I just know subsection 1, is it enough? No. Same way, section 6 of Income Tax Act talks about the residential status and it has various subsections. Only when I know all the subsections, I will be able to tell when a person is said to be resident in India. If not, I might miss out, guys. Then, coming to the proviso and explanation. And whatever provisions are given in the law, whether under the respective section, subsection, or clause, it might have proviso or explanation, guys. Now, what is proviso? The proviso spells out the exception or an additional conditions to be satisfied for the respective provisions contained in the main section or subsection or the clause. And always the proviso will start with the word provided. Wherever you see any paragraph which starts with the word provided, that is called proviso, guys. Got it? Yes. Same way, coming to the explanation. Explanation will give a clarification relating to the provisions contained in the respective section or subsection or clause. Let me explain both of this with an example. Guys, in income tax, section 80 GGB and GGC gives deduction for political contribution. Yes. So GGB and GGC talks about the contribution and when the deduction is available. But there is a proviso telling if you give this donation in cash, then no deduction. Then no deduction. Likewise, for any provision, there can be an additional condition or exception added through what? Proviso. Whereas coming to explanation, under section 80 GGB and GGC, they have used the word political contribution made to a political party. Now, what is political party? They are given in the explanation. They have told political party means the political party which is registered under the Representation of People's Act. I cannot consider however I want. So they would have used the various words or terms in the respective provision. No? What is it exactly? They may give it in explanation, guys. Got it? Yes, sir. Now coming to the Annual Finance Act. Every year, the finance minister of the country will present a budget in the month of February, which will be implemented from 1st April. One of the important component of the budget is the finance bill. Any proposed changes in the present law will be made through this finance bill. And the finance minister will present this finance bill in the parliament. And once it obtains the majority of the members' approval in both the houses, that is Lok Sabha as well as Rajya Sabha, it will go to the president. Once president gives her or his assent, then the bill will become act and it will be implemented from 1st April. Because in India, we always follow the financial year, guys, for income tax purpose. Yes. And which is the Finance Act applicable for your exam is Finance Act 2025. Here also I want to give one clarification. Guys, recently a new Finance Act has been implemented. That is Finance Act 2026. But nothing contained in that will be applicable for your exams. So please don't worry about any changes or amendments which are proposed through the new Finance Act. Then coming to income tax rules. Income tax rules play a supporting role to the Income Tax Act. Wherever in the act they cannot give a clarity, they would have mentioned as may be prescribed or in the prescribed manner within the prescribed time. within the prescribed limit. And it will be prescribed, or the manner will be mentioned or prescribed. Where, sir? In the income tax rules. If I have to give one example, guys, in income tax, as per section 32, every assessee is supposed to charge the depreciation under the WDV method, except the assessee who is engaged in the business of electricity. Yes. Now assume I am not engaged in the business of electricity, so I am supposed to follow WDV method. And when I'm supposed to follow WDV method for various assets, and the depreciation rates for it, for each category of asset or for each block of the asset, is given in the income tax rules, guys. Got it? So section 32, which talks about the depreciation, will refer to the rules. The depreciation rate under the WDV method for each block is given in the rules. Yes. Then coming to the notifications, the CBDT issues notification from time to time for proper administration of income tax. And any notification which is released by either central government or CBDT will be binding on everyone, guys. Binding on everyone in the sense whether it is public at large or the department or even the government officials. Yes. And any communications the government wants to make, they will make the announcement through what? Notification. Even when our institute wants to make any announcement, will they call and tell each and every student? No. They will just release a notification. Same way, government would be releasing a notification whenever they want to communicate anything with respect to the income tax to the public at large, guys. Then coming to the circulars. Circulars are issued by the CBDT to clarify the doubts, especially in indirect tax. You would have learned a lot of circulars, guys, through which a clarification is given. Whenever there is a confusion with respect to the applicability of provision, the government or the respective body, that is CBDT or CBIC, they will come up with the circular in order to give clarification. If I have to give one example in income tax, there is a circular telling if an assessee reach an age of 60 years or 80 years, even on 1st April of assessment year, they enjoy the higher basic exemption limit under optional scheme. Higher basic exemption limit of either 3 lakh for senior citizen or 5 lakh for super senior citizen. But this is available only for the resident individual who is following optional scheme, guys. This is a clarification given through circular, and the circular is binding only on the department, but assessee can take an advantage of it. Now assume I am a super senior citizen. Can I take an advantage of the circular telling, assume I am celebrating my 80th birthday on 1st April of assessment year. Am I eligible for a higher basic exemption limit of 5 lakh? Yes. Can I make use of this circular? Yes, guys. Then coming to the judicial decisions or the judgment given by the court. Decisions pronounced by Supreme Court become the judicial precedent and are binding on all the courts, including the high courts, appellate tribunal, income tax authorities, and all the assessee within India, guys. Whereas any decisions given by the high court will be binding only for the people and the department within the jurisdiction of that particular state. For example, assume the Karnataka High Court has given any decisions that will be binding only for the people within Karnataka and for the department within Karnataka. Will it be binding for the people of Tamil Nadu, Andhra Pradesh, Kerala and all? No, guys. Same way, assume a Madras High Court has given a decisions. It will be binding only on the people of Tamil Nadu and the department within the jurisdiction of Tamil Nadu. And sir, assume now Karnataka High Court has given a decision. Will it have any binding on the another High Court or the High Court of any other state? No. They can refer to it, but it is not binding. For example, now Karnataka High Court has given the decisions in favor of the assessee. Now the similar case is pending in Madras High Court. Should Madras High Court also give the decisions in favor of assessee only? Need not be. Can they change the decision? Yes. They can refer to the decision given by Karnataka High Court, but it is not mandatory for them to give the same judgment, guys. Got it? Yes, sir. Then coming to the basis of charge, guys, in income tax we have two set of charging section. One is general charging section, which is section 4, and the other one is specific charging section. Specific charging section means the first section under each head. There are totally 5 heads of income in income tax, right? The first section under each head is a specific charging section which will tell what income is taxable under that respective head. Whereas section 4 is a general charging section. We are covering section 4 now. Whereas the specific charging section, we will cover it under the respective head, guys, which we will take up later. Yes. What is section 4 telling? We will see. As per section 4, the total income of a person for the previous year is charged to tax in the next following assessment year. So income earned by a person during the previous year will be taxable in the assessment year. So we need to understand various terms here, guys, one by one. First one, total income, which is defined in section 2 clause 45. Sir, definition is okay, but calculation of this is a challenging thing, guys, because the computation of total income or computation of total income along with tax liability will be asked under compulsory section. That is the first question under the descriptive type will be on this. Okay, which is our task later. We will take up later. Yes. So the total income of a person earned when earned during the previous year is taxable when in the assessment year. So we need to understand this terms, guys. Actually, total income is in income tax, there are totally 5 heads of income. When we compute the income under each head, we will calculate the aggregate of it. And if there is any effect of clubbing and set off of losses, we will give the effect for it. And we will claim all the deductions which the assessee is eligible under chapter 6A, which is covered from section 80C to 80U. But most of them is blocked under default regime. Very few are available under default regime. Whereas under optional regime, that is if assessee is following optional scheme, they can claim it. Yes, I repeat, once we calculate the income under each head and give effect for clubbing and losses, we get gross total income. And from gross total income, we can claim various deductions under chapter 6A from section 80C to 80U. And after claiming deduction, whatever figure we derive is called total income. And assessee is supposed to pay tax on such total income as per the rate applicable to them. Yes, sir. But total income calculations and all we will be learning later, guys. Yes. And income is defined in section 2 clause 24, which is an inclusive definition, guys. There are list of incomes given under section 2 clause 24, which includes subsidy, incentives, or even capital gains income. All those are there, and it is not a end list. It is an inclusive definition. And here I have not given an income definition because we will be learning all those items under the respective head, guys. Okay, sir. So other words we will be learning one by one. First, concept of income. Income might be earned in cash or in kind, guys. And here cash means money form. Now assume I gave a professional services to you and you are paying me 2 lakh. Is it my income? Yes. Next, assume I gave professional services to you and you are giving me a laptop. Is it an income for me? Yes, the value of the laptop will be an income for me. So can income be in kind? Yes. Then coming to income can be taxed on receipt basis or accrual basis. What is taxable on what basis is given in the law, guys. Most of the times income will be taxed on accrual basis, but in few cases income can be taxed on receipt basis. Example is like interest received on compensation or enhanced compensation will be taxable in the year in which it is received. Same way, if there is any subsidy or grant received from central government, it will be received, or any government. It will be taxable in the year in which it is received, guys. Is that clear? These are few examples. Most of the time, income will be taxed on accrual basis. If it is taxed on receipt basis, then it will be specifically given in the law. Got it? Yes, sir. Then income might be legal or illegal. Even illegal incomes are taxed under the Income Tax Act. Clear? Whether it is sir good or bad and all that will be taken care by the respective departments. But income tax department is like you have earned the income. We don't care whether it is legal or illegal. Pay tax, baba. That's all. Yes. Then income can be temporary or permanent. For example, after exam, you guys were free for 1.5 month. So you did some freelancing work and you earned some income, temporary income. Is it considered as your income? Yes. Now you cannot take a protection telling, sir, I am not earning this income throughout the year, sir. This is not my salary income, sir. Still, it is considered as your income. Then permanent. Guys, there is nothing permanent. We ourselves is not permanent, but still permanent means which we are earning regularly, like salary income, interest income, dividend income. Is it considered as income? Yes, some. Then lump sum or installment. Income can be received in lump sum, in one shot, or even in installment. Will it be considered as income? Yes. For example, I made a sales of 10 lakh to you. I am receiving it in one shot, upfront payment, 10 lakh rupees. Is it my income? Yes. Or else I gave you an EMI option. You are paying me every month 1 lakh. Is it income for me? Yes. So it is just an arrangement between you and me. However, you pay me will not change the nature of income for me, guys. Clear? And sir, is it capital receipt or revenue receipt? It is always revenue. Sales is always a revenue receipt for me, no matter how I receive it, guys. Then gifts. As per section 56 to 10 of Income Tax Act, gift is taxable under the head income from other sources, guys. There are few exceptions, like if you receive any gift from relative or if the value of the gift is less than 50,000 and all, it is not taxable. But anyway, sir, can gift be considered as income? Yes. And gift can be in the form of money, movable property or immobile property. In case of movable and immobile property, we need to check fair market value or stamp duty value and all to see whether it is taxable or not, which we'll be learning in income from other sources, guys. Then the income can be in revenue or capital receipts. Guys, normally revenue receipts are taxable, but for few revenue receipts, exemption is given under section 10 of various clauses, whereas capital receipt normally not taxable. But there are few capital receipts specifically given in the law that it is taxable. That is, three capital receipts are there. That means only those three capital receipts are taxable. Any other capital receipts are not taxable. Now, sir, what is capital? What is revenue receipts? Guys, it is actually an accounting topic. What is capital? What is revenue is not defined under the income tax law, but it is a part of your syllabus. So you should know the difference between capital and revenue receipt. What is it? We will see. An amount which is referable to fixed capital, we call it as capital receipt, which doesn't change in the ordinary course of business. Sir, due to day-to-day operations, will this capital change? No. I can call it as like fixed capital, guys. Clear? Whereas the amount or receipt which is referable to circulating capital, or we also call it as working capital or operating capital, is called the revenue receipt, which keeps on changing after each and every transaction. After each and every transaction, especially in financial management and all, you would have learned, sir, how do we calculate working capital? Current assets minus current liabilities. Will this balance remain same throughout the year, guys? No, it keeps changing. Day in, day out, it keeps changing. Okay, so whatever we use the term working capital in financial management, here they are using the word circulating capital, which keeps changing, guys. Got it? Yes. Then coming to revenue receipts, profits and gains arising from the various transactions which are entered in the ordinary course of business, or those which are incidental or closely associated with this business, would be revenue receipt chargeable to tax. Simple example, if I have to tell, guys, whenever there is a transaction, you just identify whether it is relating to stock or whether it is relating to fixed asset. If it is relating to stock, then obviously my business itself is to buy and sell this, or to manufacture this and sell it. So what it would be, sir? My revenue receipt. Same way, sir, if I earn anything from the sale of fixed asset or if I purchase fixed asset, am I doing it in the ordinary course of business? Is my business buying and selling fixed assets? No, guys. I am using it in my business to generate revenue. So anything related to fixed asset will not be revenue receipts or revenue payments. It will be capital in nature. Clear? Or if I have to give one more thing, guys, always what is revenue or what is capital depends on the nature of business. Now assume I am a trader. Buying and selling stock is my business. Then stock shares is what for me? Inventory or stock to me. And anything I do with respect to this will be a revenue transaction. Whereas now assume you are just making investment in shares as your investments. Clear? You are not in the business of buying and selling the shares. In that case, what will be the shares to you? Is it inventory? No, it is an investment. It is like a fixed asset for you. In that case, if you buy and sell the shares, what it would be? A capital transactions, guys. Let me give one more example. Assume I am a furniture dealer. My business itself is to purchase furniture and sell furniture. In that case, furniture is an inventory for me. Any transaction with respect to furniture would be a revenue transaction for me. Now assume there is an academy who purchase furniture to use it for a longer period. They are not in the business of buying and selling the furniture, but they are using it for a longer period. So in such case, furniture is a fixed asset for them, and any transaction with respect to fixed asset will be capital in nature, guys. Clear? And if I have to give one more point, guys, any transaction which will have an impact on P&L account or P&L statement, I can term it as revenue. Same way, if there is any transaction which will have an impact on the balance sheet, I can call it as capital transaction, guys. Okay, sure. Revenue receipts are normally taxable unless exemption is given under section 10, guys. Now coming to the capital receipts. Normally not taxable unless specifically included in the act. There are three capital receipts which are specifically included in the act telling it is taxable. Which are those? Compensation received on the termination of employment, or compensation received on the termination of agency contract, and the last one is capital gains on the transfer of capital assets. These three receipts are in the nature of capital, but still they are taxable. Any other capital receipts are not taxable under the income tax law, guys. Okay. Then we will move to the definition of person. Person is defined in section 2 clause 31. Person includes almost everyone, guys. Let us see the list. Person includes an individual like you and me, natural human beings, then Hindu undivided family, that is HUF, then a company, any company, guys, whether public company, private company, OPC, or government company, any type of company, foreign company, Indian company, domestic company, everything is covered. Yes, sir. Chalo. Next, a firm, a partnership firm, and for income tax purpose, a firm includes even LLP, guys. Please be careful with it. Okay, sir. Next, an association of person or body of individual. Both are covered under the person definition, but there is one major difference between them, guys. And first of all, who is association of person or body of individuals means they are the group of people who come together with a common objective or common intent in order to complete a particular task. Yes. One major difference between both is any person can be a member of association of persons. Whereas in case of body of individual, only individuals can be a member of it. Clear? For example, can partnership firm or a company be a member of EOP? Yes. But can they be a member of the body of individuals? No, they cannot. Then local authorities like municipality for urban area or panchayat for rural area, and every artificial juridical person, whoever is not covered in the above list, whoever is not covered in this list, no, they fall under the last category, guys. Last category. For example, hospital, educational institution, charitable institution, they come under person definition. In under what? Every artificial juridical persons. Okay, sir. Next, the most important definition, that is assessee. Any person who pays income tax is called assessee, guys. Don't use the word taxpayer. Being a professional student, please don't use the word taxpayer. Use the word assessee. Yes, sir. So assessee is defined in section 2 clause 7. What is it? We will understand. Assessee means a person. Who is person? We already understood. 2 clause 31. By whom any tax means which tax, sir? Even GST? No, any tax under this act means income tax act, guys, including cess, surcharge, everything. Okay. Or any other sum of money. They have used the word any other sum of money. Any other sum of money means what, sir? It is like interest, late fee, penalty, guys. Interest, late fee, or penalty. For example, sir, I have not paid income tax, but I have just paid some late fee for filing my nil return or loss returns. Am I still called as assessee? Yes. Is payable under this act. Please be careful. Here they have used the word under this act. So any tax here means which tax will you pay under the income tax act, guys? Income tax. Okay. And it includes. So if I am paying income tax or interest, late fee, or penalty under income tax act, am I called as an assessee? Yes. And it also includes the following people. Who are those? One by one. If I am a person against whom or with respect to whom any proceedings has been initiated under the income tax law to compute my income or to compute the amount of loss of which I have suffered a loss, or I have already claimed a income tax refund but they are recomputing it or reassessing it, or they are computing the income of some other person with respect to whom I am assessable. like clipping of income, guys. So if there is any proceeding which has been initiated on me with respect to this, I am called as an assessee. Okay, that is, if income tax department or assessing officer has taken a step to compute my income or the amount of loss or the refund due or the amount of income of, assume, my wife, with respect to whom I am supposed to pay tax, am I called as an assessee? Yes. Then every person who is deemed to be an assessee, we also call them as representative assessee, guys. For example, if a minor child has earned an income with their own efforts, then should they pay tax? Should they file the returns? Yes. But the parent or guardian will act as a representative assessee on behalf of them. Same way, there is a non-resident assessee who is earning an income in India, but that person doesn't have any physical presence in India. In that case, there can be any resident in India who is representing that non-resident. In that case, what do we call them as? Representative assessee, guys. Last one, every person who is deemed to be an assessee in default. Now assume I have contravened the provisions of income tax law. Am I called as an assessee? Yes, assessee in default. For example, under TDS topic, payer is the one who has the responsibility to deduct TDS when it has to be supposed to be deducted. When it is supposed to be deducted, the payer has to deduct TDS. Correct? No? Yes. Now, if it doesn't deduct TDS or else deducted TDS but not remitted to the government, then the payer has caused loss of revenue to the government. Yes. Can government treat them as assessee in default? Yes, guys. In such case, the payer who is in default can be treated as assessee in default. Okay, sir. And the last line there, every assessee is a person. Obviously, only when you are a person, you can be covered here. Okay, sir. But every person need not be an assessee. Every person need not be an assessee. For example, you assume you are not earning any income. In that case, are you a person? You are a person? No. Any doubt? No. You are a person. But are you an assessee? No, sir. Because I am not paying any tax. I am not filing any returns. I am not paying any other sum of money. And even I am not covered under any of this point. So in such case, are you an assessee? No. But are you a person? Yes. Okay. Then coming to the assessment year, guys. Assessment year is defined in section 2 clause 9. Assessment year means a period of 12 months. It will always be a period of 12 months. It can never be less than 12 months, guys. Commencing on 1st April and ending on 31st March. And this is the year in which the tax has to be paid and income tax returns has to be filed. The due date to file income tax returns will always fall in the assessment year, guys. There are few exception cases where income earned in previous year will be taxed in previous year only, but still for such income, returns has to be filed in the assessment year. Got it? Yes, sir. Now, what is previous year is defined in section 3. Let us understand it. Previous year means the financial year immediately preceding the assessment year. This is the definition given. Immediately preceding what? Assessment year. In simple, if I have to tell, guys, previous year is the year in which income is earned by the assessee, but it will be subject to tax in the assessment year. And previous year should always be a financial year, guys, starting from 1st April and ending on 31st March. Normally, it will be a period of 12 months, but there are few exceptions where previous year can be less than 12 months. Guys, hear me clearly. Focus here. Previous year can be less than 12 months, but assessment year can never be less than 12 months. Normally, previous year will be 12 months from 1st April to 31st March, but there are few special cases where previous year can be less than 12 months. Sir, when is it? I have given it here. In case of newly set up business or profession, I started my profession from 1st July of the previous year and I started for the first time. So in that case, what would be my first previous year, guys? From 1st July to 31st March. Correct? Yes, sir. Or a new source of income coming into existence in the middle of the previous year. So I started earning the income from the new source for the first time in between the previous year. Assume from 1st November. So what would be my first previous year? 1st November to 31st March, guys. Is that clear? Yes, sir. Then the last one is in case of discontinued business. Sir, I am liquidating my business. I was carrying on from last 10 years, 15 years. Now I am liquidating it. I am discontinuing it. So in that case, assume I am discontinuing on 31st December of the previous year. So what would be my last previous year, guys? From 1st April to 31st December. Less than 12 months. Got it? Yes. General rule is, as per section 4, which is the general charging section, income earned by, that is total income of every person earned in the previous year is chargeable to tax in the assessment year. This is the general rule. But there are few exceptions for it. What are those exceptions? I have given here. One by one, let us learn. These are the important things, guys, because any student will know the income earned in previous year will be taxable in assessment year. But you have to be careful with these points. Exceptions to the general rule. In the following cases, the income of the assessee is taxable in the previous year itself. What are those? One by one. First one, shipping business of a non-resident. If there is any non-resident shipping company who is earning income from Indian soil, means they are carrying goods, passenger and livestock from Indian port to foreign port. On whatever freight they are charging for carrying goods, passengers and livestock from Indian port to foreign port, they have to pay tax in the previous year itself before leaving the Indian port. Only then they will be allowed to leave Indian port, or they have to make alternate arrangement. Clear? Yes. And in that case, they are considered as, means their presumptive income will be considered as, not the actual income. Sir, what is presumptive income? Whatever freight they will earn from carrying passenger goods and livestock from Indian soil, no, or from Indian port, 7.5% of that will be considered as deemed income, guys. 7.5% of that will be considered as deemed income. Please be careful. 7.5% is not the tax rate. 7.5% is considered to be the income. That means remaining 92.5% is allowed as expenses. But obviously, why they have included this is, we are asking them to pay tax before they leave Indian port. Now, can I ask them to maintain proper books of accounts in India and show what is the actual profit they have earned? No, it won't be possible. They might be maintaining books of accounts in their home country, but not in India. So that is why we are considering whatever revenue they will earn through freight collections, 7.5% of that we will consider it as income. On that, whatever is the tax rate applicable, you pay tax on it. Clear? Yes. Next, person leaving India permanently, section 174, that is our Vijay Mallya case. Similar to that. Yes, sir. When income tax department or the assessing officer get to know that, if they get any smell that any assessee is leaving India permanently and they don't have any intention to come back, can they charge tax on whatever income they have earned till the date of departure in the previous year itself? Yes. From the beginning of the financial year till the date of departure, whatever income they have earned, they have to pay tax. Only then they will be allowed to leave India permanently. Now you might ask me, so how will the income tax department get to know that any person is leaving India permanently? Guys, you have something called as passport, visa and all, which is under the control of central government. And even income tax comes under the control of whom? Central government. So there will be information passed on by the passport department or visa department to the income tax department whenever the person is moving out of India permanently. Yes. Next, association of persons or body of individuals or artificial juridical person formed for a particular event or purpose. Now assume we all have formed an association of person in order to celebrate Children's Day or Teachers' Day. And from each student, we are collecting some fees or some amount. And once this celebration is done, we will discontinue. We will discontinue because our purpose is served. Yes, sir. So in that case, whatever purpose we had served and we have completed, now can department or assessing officer ask us to pay tax in the previous year itself? Yes, guys. Because if they wait till assessment year, there is no association. There is no association. Is that clear? So if any association or body of individuals has been formed for a particular purpose, and if that purpose is likely to be completed in the previous year itself, assessing officer can demand the payment of income tax in the previous year itself. Next, transfer of property to avoid tax. If assessing officer get to know that any person is transferring the property in order to evade the tax, and if he doesn't have any sources of income, Can assessing officer charge and collect the taxes in the previous year itself? Yes, guys. But most of the time when I transfer capital asset, will that charge and collect tax in the previous year itself? No, because I might have different sources of income. If the assessing officer wait till the assessment year, their revenue is protected because I have one or the other source of revenue to pay the taxes. But assume my grandfather had 100 acres of land. He doesn't have any other asset, any other income, and he is selling that asset during the previous year and he doesn't have any intention to pay tax. In that case, can assessing officer charge and collect the tax in the previous year itself? Yes, guys. The last one, discontinued business, section 176. In case where the business or company is getting liquidated, in that case, the assessing officer has an option. He can charge the tax in the previous year itself, or else he can also wait till assessment year. Only in this case, it is optional, guys. Why they are giving it as optional, so? Because especially when it is a liquidation of company and all, guys, a neutral person called liquidator would be appointed. He will supersede the management of the company from board of directors. And what do? Is they will sell all the assets, realize the money, discharge all the liabilities in the order. There is a particular sequence in which the liabilities has to be discharged. They will discharge in that order. And you can observe the tax will come on the top there. So in that case, can assessing officer wait till the assessment year as the chances of manipulation or the chances of losing the revenue is less? Yes. If not, can they charge and collect it in the previous year also? Yes, it is left to them, guys. It is at the option of the assessing officer. Yes. Next, we have few more cases. Normally, income earned in the previous year will get taxed in the assessment year. But assume assessee had earned an income in the past. He was supposed to disclose it, but he has not disclosed it. But after a few years, assume during our previous year, there is an income tax raid conducted or investigation, scrutiny, or any of the search has been conducted on the assessee premises. And department got to know that he has earned lot of income or assets or investments, but he has not disclosed it. Can they tax it now? Yes. So if assessee has earned any income in the past which he has not disclosed, now can he take a protection telling, sir, no, for that previous year assessment year is already over, so I will not pay tax now? No. The year in which such income or investments or the expenditures which is incurred but which is not accounted or for which the assessee is not able to explain the source can be considered as an income in the year in which it is detected by the assessing officer, guys. Clear? Yes, sir. What is it? I will quickly read it. However, in certain cases where income is not disclosed by the taxpayer or by the assessee, but it is detected by the income tax department through what procedures? Maybe search, raid, or investigation, and the source for which is not satisfactorily explained by the assessee to the assessing officer. It is deemed to be the income in the year in which it is detected. The year in which it is detected, it is considered to be an income, guys. Okay, sir. Which are those few examples? Few cases are there. What are those? Cash credits. There is an income which is credited in the books of accounts, but it is not disclosed for income tax purpose. Same way, unexplained investments. Assessee has made various investments in land, building, and all, but obviously they have to get money from that. Only then they can invest, no? Yes. But in their income tax return, they have disclosed only 2 lakh income, 5 lakh income. But the amount of investment what they have made is 10 crore, 5 crore like that. And assessee is not able to explain the source for these investments, from where he got this money and he has made investments. In such case, can it be considered the value of that investment can be considered as the income, guys, in the year in which it is detected. Same way, unexplained money. You guys would have seen in the news channel and all, or you would have read in the newspaper that the income tax department conducted a raid, or ED, Enforcement Directorate, conducted a raid and they found so much of unaccounted money in the place of the respective person. In that case, if they are not able to give an explanation why they hold so much of cash, can it be considered as income? Yes. Next, amount of investments which is not fully disclosed. For example, assessee has made total an investment of 10 crore, but he has disclosed only 2 crore. Remaining 8 crore, can it be considered as income? Yes. Next, unexplained expenditure. Sir, even expenditure can be considered as income? Yes, guys. Now assume An assessee has incurred totally 5 crore for marriage of his daughter. But in his return, he has never disclosed so much of income. Now department got an doubt and they have sent a notice telling you have spent 5 crore. No? If you have spent 5 crore, obviously you should have first earned it. Can you explain me the source? The department has sent a notice. But now the assessee is not able to give the satisfactory explanation. In such case, whatever is the amount of expenditure for which satisfactory explanation cannot be provided by the assessee, can it be considered as the income for the assessee? Yes. Because obviously, only when you earn the income, you can spend it, guys. That is why. Amount borrowed or repaid on undi. Guys, if any amount is borrowed or repaid in any mode other than account pay check, then it will be considered as the income of a person who has borrowed it or repaid it. And if I have borrowed, assume 10 lakh loan in cash, will it be my income? Yes. What if I repay also in cash? Now assume I borrowed 10 lakh in cash, it is my income. I repaid 12 lakh in cash, including interest. In that case, again, will 12 lakh be considered as income? No, no, only 2 lakh, the interest part. The 10 lakh, which was already considered as income when I received it, will not be considered again when I repay it, if I repay it in cash. Clear? Means indirectly in F point they're telling don't pay or receive it in cash, guys. And the above income, whatever we have discussed, is taxable at the highest rate of 78%. Actually, the gross tax is 60% plus 25% surcharge will always be there, and 4% health and education says effectively the rate comes to 78%. And please don't get confused, 25% is on 60, because student might think that sir 60 plus 25 85 plus 4 89. No sir, no, no, 25% is on 60, and whatever we get 60 plus 25% on that 4%. You would be knowing it. Surcharge is always on gross tax, not on income. Clear? Whereas health and education cess is on gross tax plus surcharge. Got it? This is as per section 115 BBE. We call all this as undisclosed income. Undisclosed income will always be taxed at 78% without allowing any expenditure, deductions, or losses to be set off against that, guys. Okay, sir. Fine. Now coming to the most important part in chapter 1, agriculture income. Guys, as per section 10 clause 1, agriculture income from a land situated in India and used for agriculture purpose is fully exempt from income tax. Is fully exempt from income tax. Now, if they don't define in the law what is agriculture income, then everyone will tell whatever I am earning is agriculture income. I need not pay tax. So that is why they have defined what is agriculture income. What is agriculture income? Section 2 clause 1a, guys. Agriculture income means any rent or revenue derived from a land which is situated in India. Land should be situated in India. Sir, what? I am earning agriculture income from a land situated outside India, then it is not exempt in India, guys. Clear? If you are a resident, you will end up paying tax on it. Yes, and used for agricultural purpose. Sir, what if land is not used for agriculture purpose? Or else, for example, assume I have an agriculture land which I have let out for parking. I have let out for film shooting or movie shooting. In that case, whatever income I am earning, is it considered as agriculture income? No, no, no. It is not exempt. Sorry. Okay. There should be a land which is in India and used for agriculture purpose. Whether the owner is using it or tenant is using it doesn't matter, guys. Ultimately, land should be used for agriculture purpose. For example, listen here. Hello, focus. Assume I own an agriculture land where I myself is cultivating in that land. Whatever I earn from the sale of crops, is it an agriculture income for me? Yes. Next example. Assume I own an agriculture land, but I am a lazy person. I don't want to grow anything in my land. Now I have let out my agriculture land to you for rent. Will you pay me? How much rent will you pay me? Come on, tell me. 1 lakh, 2 lakh, 3 lakh, how much? Oh. Now you are paying me rent. Whatever rent you are paying me, is it an agriculture income for me? Yes. Whether you pay rent in money or in kind. Kind in the sense, whatever you are growing, assume 50% of that you are giving to me. Is it still an agriculture income for me? Yes. Now, whatever 50% what you grow, you will give it to me, no? Whether I use it for my personal purpose or I sell it. Even from selling it, whatever I earn from selling of crops also will be considered as agriculture income for me. Okay, now, yes. Now, remaining 50%, which you will sell, from sale of crops, whatever you will earn as a tenant, is it an agriculture income for you? Yes. Yes. Now you might ask me, sir, what if I sublet it to my friend? Same story continues. Whatever your friend will earn from that land is an agriculture income. Whatever rent you will earn, whatever rent I will earn is an agriculture income. But only from this land. I might be earning rent from my building and all, which is commercial building and residential building and all. Those things are not covered. Whatever we are earning from the land which is used for agriculture purpose, which is in India, no matter who is using it, whether it is owner, whether it is tenant, or it has been sublet to another tenant, in that case also, whoever is earning the income from such land directly or indirectly will be considered as agricultural income tax. Got it? Yes. Coming to B point. Any income derived from such land by agriculture or by the process employed to render the produce fit for the market or by sale of such agricultural produce by the cultivator or receiver of rent in kind. Now, assume I am the owner, I myself is cultivating, or else I am letting out my land to you for a rent. If either of us do any activities which will not change the nature of the crop, all those activities are treated as agricultural activities, guys. For example, tilling of land, sowing of seeds, tending, pruning, cutting, cleaning, drying, all these are part of the agricultural activities. But if you change the nature of the crop, for example, sir, I am converting the fruits into fruit juice. I am converting potato into potato chips. Now, am I changing the nature of the crop? Yes. In such case, whatever I am doing, can we call it as agricultural activities? No, guys. We should not change the nature. Got it? Now, sir, sugar, I am growing sugar cane. Once I grow, I will harvest it and clean all the unnecessary things and I will give it to the respective manufacturer of sugar. Now, whatever I will earn from the sale of sugar cane, is it an agriculture income from me? Yes. But what if I myself grow the sugar cane, then convert it into sugar and sell it? Conversion of sugar cane into sugar or jaggery is not an agricultural activity, guys. In that case, it will be partly agriculture income, partly business income. How to segregate it and all, we have few rules. We will take care of it a little later. Got it? In this chapter only. Yes. Then, guys, one thing to note here is agriculture land, if it is used for agricultural purpose and if the land is in India, no matter whether it is in rural area or urban area, doesn't matter. If land is in India and used for agricultural purpose, it is always an agriculture income. But last point is talking about building. If there is agriculture land and if there is a building inside that land, within the vicinity of that land or next to that land, then income earned from that building is also considered as an agriculture income, provided certain conditions are satisfied. Certain conditions are satisfied. So I have given you C point. Please be careful. First 2 points, especially first point is with respect to land. Second point is with respect to few activities which can be treated as agricultural activities, provided the nature is not changed. Okay. The last one is with respect to building, guys. Any income derived from a farm building subject to conditions. So what are those conditions? I will just take the help of my provision book here. I've given it in my provision book. Just a minute. Yes. I'm straight away reading the last point, guys. Any income derived from a farm building, provided the following conditions are satisfied. Guys, all the conditions has to be satisfied. Only then income from building will be treated as agriculture income. Yeah. So please be careful. We are dealing only with the building now. Land part is done. Okay. What are the conditions? First one, the building is on or in the immediate vicinity of the agriculture land. For example, if this is the agriculture land, guys, building has to be within the agriculture land or next to the agriculture land. It should not be far away. Okay. Next, it should be occupied by the cultivator or receiver of rent or revenue. For example, I am the owner. The building has to be occupied by me, or if I let out the land along with the building to you, it should be occupied by you. Either of us. Okay. Next, it should be used as a dwelling house or storehouse or outhouse in order to store my crops or agricultural equipments and all. Last one, this is important. The land is assessed to the land revenue in India or be subject to a local rate assessed and collected by the officers of the government, that is the property tax, guys, or it is not situated within the specified area. And specified area for income tax purpose is nothing but urban area, guys. It should not be situated in specified area itself. That means it should be in urban area or it should not be in urban area. It should not be in urban area. Clear? In simple, it should be in rural area. And what is specified area? They have defined it. Clear? I will try to explain it here. Just a minute. See, all this comes under the agricultural activities, guys. I have just given few images. Yeah. Please observe. Please observe. I am discussing the specified area. Specified area is nothing but for income tax purpose, urban area, guys. Okay. You don't use the word in your explanation urban area. Please use the word specified area. Okay. If there is any municipality or containment board where the population is less than or equal to 10,000, less than or equal to 10,000, we call that area as not a specified area. In simple, rural area, not a specified area. And if there is an agriculture land in that area, any income from the land which is used for agriculture purpose is an agriculture income along with the income from building. This part is building, guys. Clear? Why, sir? Because it is not a specified area. Even the income from the building which is within the agriculture land or next to the agriculture land, the income from such building is also considered to be agriculture income, guys. Is that clear? Yes, sir. So please be careful. This is not a specified area. Why, sir? Because the population is less than or equal to 10,000. Sir, what if it is more than 10,000? Then I have given a diagram here. If the population of the municipality or containment board is more than 10,000 but up to 1 lakh, do we call that area as specified area? Yes. So this area is called as specified area. And if I have any agriculture land in that area which is used for agriculture purpose, from that land whatever I am earning is called agriculture income. Whereas if there is a building in that land or next to that land, whatever income I am earning from that farm building, from that building is not an agriculture income, guys. NAI stands for non-agricultural income. From that building, please be careful. There is a difference in colors also. Whatever is given in green is an agriculture income. Whereas from the building, whether it is within the agriculture land or next to the agriculture land, do we treat the income from the building as agriculture income? No. It is not an agriculture income. Plus, this area is a specified area, right? Yes. Plus, 2 kilometers from its limits is also treated as specified area, guys. Whatever is the border of this particular municipality or containment board is there, no? 2 kilometers from that also is considered to be a specified area. So can I consider all this as specified area, guys? Yes. Now, let me give one more example. Assume I have agriculture land in this part, which is outside this municipality or containment board, but within 2 kilometers. Yes, sir. So, the income from agriculture land which is used for agriculture purpose is agriculture income. But the income from building is not an agriculture income. Why, sir? Because it is in a specified area, guys. Got it? Yes, sir. Next one. There is the municipality or containment board whose population is more than 1 lakh but up to 10 lakh. More than 1 lakh up to 10 lakh. Is that area a specified area? Yes. Plus 6 kilometers from its border is also called as what? Specified area. You can look here. Even these areas are called as specified areas. So yes. Must. First, let me talk about this. So this area is a specified area. If I have a land within this area and if I'm using it for agriculture purpose, is it an agriculture income? Yes. From land, whatever I'm earning is an agriculture income. But what about the building part? If I am earning any income from the building, will it be considered as an agriculture income? No, guys. It is not an agriculture income. Same way. Now, sir, I have a land which is outside this municipality, but within the 6 kilometer. Within the 6 kilometer. Do we call this as specified area? Yes. Even in such case, income from building will not be considered as agricultural income, guys. Got it? Yes. Last scenario. What if population is more than 10 lakh in a particular municipality or containment board? Similar provision, but here instead of 6 kilometer, it would be 8 kilometer. That area would be a specified area plus 8 kilometers from its border. Even these areas are called as specified area, guys. Is that clear? So in such case, income from the building will not be considered as agricultural income. Hope you got it. Yes, sir. Then I have also given in my provision book few examples for agricultural income and non-agricultural income. You can just have a look into it, guys. You can pause and have a look into it. Especially this looks like agriculture but not agriculture. CBDT has clearly given a clarification telling the following is not considered as agricultural income and hence it is taxable. And hence it is taxable, people. Okay. Let me move forward. We are done with the discussion. Now, please pay attention. Look here, look here. Hello? Look here, look here. Now, if I am only growing crops and if I am selling it, whatever I earn from the sale of crops is an agricultural income. I enjoy full exemption, guys. Next, I don't grow crops. I purchase crop, I manufacture a product out of it. Assume I purchase tomato and manufacture ketchup out of it and I sell it. 100% business. 100% business. I repeat. Assume I grow tomato and I sell it as it is. 100% agriculture income. Next, I don't grow tomato. I purchase tomato, manufacture ketchup out of it and I sell it. Whatever I earn from the sale of ketchup, it is my 100% business income. Clear? 100% agriculture, 100% business we discussed. But there can be few cases where the same assessee grow the crop as well as manufacture a product out of it. For example, I manufacture tomato and use it in the manufacturing process to manufacture ketchup and then sell it. It is partly agriculture and partly business. Sir, how to differentiate or how to segregate how much is agriculture, how much is business income? Because agriculture income is exempt, whereas business income is taxable. How do we segregate it, sir? So the rules are there where they have clearly given what is the percentage breakup between agricultural income and business income. And please note, guys, agriculture income is exempt as per section 10.1. Whereas business income, which we also call it as non-agriculture income, is taxable. But if assessee has both, the tax rates remain same. But the way we calculate the tax, we need to apply few steps, which we will be learning in the tax rate chapter. It is slightly different. Clear? But you have to be careful with it. Got it? Yes. So whatever rules we are learning now is when same assessee is growing as well as manufacturing. Got it? If I'm only growing, 100% agriculture. If I'm only manufacturing, 100% business. But what if I do both? That is what we are seeing. We have 4 specific rules, guys. We'll first see that. Rule 7A. If assessee is engaged in growing and manufacturing of rubber, 65% of the income will be considered as agricultural and 35 will be a business income. Whereas if assessee is engaged in coffee, growing of coffee and manufactured, which includes only cured part, 75%, 25% is the ratio. What if assessee is growing coffee, cured, roasted and grounded? This is extra here, more of manufacturing here. So that is why the ratio is 60-40, more of business. Clear. Majority is still on the agriculture side, but this ratio you can see, it is increasing now. Business part is increasing because here roasted and grounded is there. Please be careful. Only in the question when they have used this word, you apply 60-40. If they just use the word grown and manufactured or grown and cured, please apply 75-25, guys. Please be careful with it. Clear. The last one is tea. If assessee is growing tea and manufacturing it, then the ratio is 60-40. 60-40, guys. So please remember this. When there is any question, you are supposed to, on this, when there is any question on segregating the agriculture income and business income, you are supposed to know this ratio. This will not be given in the question. Please be careful. Especially for coffee, there are chances that you might get confused. Please be careful. This is the additional part here. Got it? Yes. And whenever there is any question on this calculation, guys, apply this percentage on income. Assume they have given the sale value as 10 lakh, cost of cultivation 5 lakh, then manufacturing cost 2 lakh. What is the income of the assessee? 3 lakh. Apply the percentages on 3 lakh. Clear? If all these figures are given, first find out what is the income. How do we calculate it? Sale value minus cost of cultivation, that is for growing crops and all, then manufacturing cost. You deduct both, whatever you get income, split that between agriculture income and non-agriculture income. But sometimes they will give only 10 lakh in the question, or only 2 lakh in the question, or 3 lakh. They are just considered as income. In that case, on that figure, straight away apply these percentages. In simple, if they are not given the sale value, expenses and all separately, whatever figure they have given in the question, consider that as a income and segregate it between agriculture income and business income by applying the respective percentage, guys. And as I already told you, business income, we also call it as non-agricultural income or taxable income. Got it? Yes, sir. So this is specific rules applicable for what? Rubber, coffee and tea. Sir, what if it is any other product? Then we need to apply general rule, guys. This is the most important one. General rule. What is general rule telling us? Where in any other case, that is other than rubber, coffee and tea, the income is partially agriculture income and partially business income. The market value of any agricultural produce so raised by the assessee, which has been further utilized or processed in such business, will be considered as agriculture income. And the same shall be allowed as deduction while calculating business income. Guys, simple. Listen here. Assume I am growing sugarcane and using sugarcane as a raw material in my manufacturing process to manufacture sugar. The day I started using the sugar cane in my manufacturing business as a raw material, that day, what was the market value of sugar cane? We need to check. And that will be considered to calculate agriculture income. Clear? So what do? We will take the market value of the sugar cane minus the cost of cultivation. That will give us agriculture income. And to calculate business income, I need to take sale value of sugar minus two things. One is the manufacturing cost, that is the manufacturing cost of sugar. The other one is the cost of raw material. But did we buy the raw material from the open market? No. But if I had bought it, how much I would have incurred? The market value. So whatever was the market value of the sugar cane, which we used to calculate agriculture income, will now become cost to calculate business income, guys. Got it? I will give few examples for rule 7, which we call it as general rule. Please observe you. Assume I am growing potato and using potato to manufacture chips in my manufacturing process. Okay. The day I started using the potato in my manufacturing process, what was the market value of the potato? Assume it is 25 lakh. And the cost of cultivation of potato, that is for growing potato, is 10 lakh. So how much is my agriculture income now? 25 lakh minus 10 lakh. It comes to 15 lakh. Now coming to the business part, which I have given in blue color. Now assume once chips is manufactured, I am selling it for 40 lakh. Okay. And there are two expenses which is involved here, guys. Cost of raw material first. Sir, did I purchase raw potato? No. But if I had purchased, what is the cost I would have incurred? 25 lakh. So this becomes the cost of raw material, guys. 25 lakh. That is nothing but the market value of the potato on the day it was put into manufacturing of chips. Okay. So what was the sale value here will become cost here. 25 lakh. Plus for this manufacturing process, assume I have incurred a cost of 5 lakh. So what would be my business income? 10 lakhs. We call this as business income or non-agriculture income, or if assessee doesn't have any other income, we call this itself as a total income. If assessee have any other income, then we need to include that also. If in case if question is silent, can I consider this itself as a total income of an assessee? Yes. Clear? Yes. One more example. Sometimes it can be partially used in manufacturing and partially sold. Assume the assessee is growing tomato and then manufacturing ketchup out of it. Now, 100% tomato is not used in the manufacturing process, guys. Assume out of whatever tomato is manufactured, 70% is sold for 30 lakh. Is it straight away agricultural income? Yes, sir. It is straight away agricultural income. Okay. Then remaining 30% is used in the manufacturing process. And what is the market value of that? 12 lakh. I repeat, 70% of the tomato is sold for 30 lakh, straight away agriculture income. Whereas remaining 30% is used in the manufacturing process. So we are not selling it in the open market. So I cannot consider sale value. Instead of that, what should I take? Market value. So what is the market value of that tomato which is used in the manufacturing processes? 12 lakh. Okay, sir. Now, in order to convert tomato into ketchup, the assessee has incurred a manufacturing cost of 10 lakh. Okay. And later, whatever ketchup has been manufactured, it is sold for. Sale value of ketchup is 35 lakh. Okay. Now let us calculate how much is agriculture income and how much is business income. And let us take the cost of cultivation for 100% of the tomato is 20 lakh for full. Okay, 20 lakh. Okay, sir. So first coming to agriculture income. What is the sale value of tomato, which is 70%? This is 70%, 30 lakh. Then what is the market value of tomato, which is used in the manufacturing process? 12 lakh, which is remaining 30%. So we are getting totally 42 lakh. What is the total cost of cultivation? 20 lakh. Reduce it. So we will get agriculture income of how much? 22 lakhs. Oh, now coming to the business income part. Sale value of ketchup, I have given it as 35 lakh here. Let us take it. Then cost of raw material, only 30% part you take. What is the market value of the tomato which is used in the manufacturing process on the day on which it is put for manufacturing processes? 12 lakh. Take it as cost of raw material or cost of input. Then manufacturing cost. How much is the manufacturing cost which is incurred by the assessee? 10 lakh. Reduce it. So we get business income of 13 lakh. Is that clear? Guys, if the question is only to segregate how much is agriculture income and business income, you will stop it here. But if in case, if they ask you to calculate tax liability also, please be careful. Don't calculate tax only on this. When the same assessee, especially when individuals or slab rate assessee, when they have both agriculture income as well as non-agriculture income, we are supposed to follow a steps to calculate tax liability. What is that step? We will learn it in tax rates chapter, guys. But you have to be careful there. Is that clear? Yes. Fine. So I have given one more example where assessee is growing sugar cane. 40% of the sugar cane is sold as it is for 15 lakh. Cost of cultivation of that part, only of that part, 40% is 8 lakh. I have tried to cover in different ways, guys, so that in any way the question is asked in the exam, you will be able to answer. So cost of cultivation of 40% is 8 lakh. So what is the agriculture income for 40%? 7 lakh. Then remaining 60% is used in the manufacturing process. The market value of that sugarcane, which is 60%, is 33 lakh. And the cost of cultivation of that 60% is 21 lakh. So if I ask you, what is the total cost of cultivation? It is 8 plus 21, 29 lakh. Is that clear? Yes. So here we get agriculture income 12 lakh. So the total agricultural income will be 7 plus 12, which is 19 lakh. Is that clear? The difference here is the cost of cultivation is given separately for 40% and 60%. They are not given total. But sir, when they have given separately also, can I total it up and take it, sir? Yes. So for example, so the total cost of cultivation comes to 29 lakh here. Yes. So the total sale value, can I add up 15 plus 33 and deduct 29 lakh from it? Yes, you will get 19, which is same. Which is same, guys. Okay, fine, sir. Then coming to assume whatever sugar has been manufactured from 60% of the sugar cane is sold for 40 lakh. Then what is the cost of raw material? This 33 lakh will come. Only 33 lakh. Don't take this. Please be careful. Then manufacturing cost is assumed 3 lakh. So what is the business income? 4 lakhs. Business income comes to 4 lakh. Hope you got clarity. Yes. Fine. Then coming to the definitions, I've just given the list of definitions which we have covered in this chapter, guys. Important, please be careful, don't ignore it. So section 2 defines various terms, whereas previous year definition is given in section 3, guys. Got it? Yes. Now come to the first page where I have given the list of sections. As of now, we have covered how many sections, guys? First section, which is short title, extent and commencement. Short title of Income Tax Act is IT Act. IT Act. Yes, sir. Extent. It is applicable throughout India, including Jammu Kashmir. Okay, sir. Sir, from when did it commence from? 1st April 1962. And one more thing, guys. Now you might be in a dilemma, sir. New Income Tax Act has been introduced. By the time I go to the final, we will learn New Income Tax Act. Will there be any drastic change? Guys, no. Majority of the provisions has been kept same. Only there is a change in the section orders in the new income tax act. So you need not worry about it. As of now, focus on your present level, that is your intermediate. Try to clear it off. Okay, there won't be any drastic change. When you already have a knowledge of the Income Tax Act 1961, it will be very easy for you to adopt for the new. Clear. So don't think that whatever I'm studying now will it go for a waste and all. Definitely not. All. Then section 2 of any act, guys. Section 2 of any act talks about what? Definition. Whatever various terms they would have used in the law or the respective topic, they would have defined it. Or else people will understand the way however they want. Like how students also do. Correct. So you are supposed to answer the questions in the exam as per the applicable law. But what student will do? They will create their own law in the exam. Okay, which even evaluator will not know. Yeah, come on. Then section 3, which talks about the previous year, which we learned in this chapter. Then section 4, which talks about general charging section. That is the total income of a person earned during the previous year will be taxable in the assessment year, guys. Then we should also learn the specific charging section, which I will cover in the respective head, guys. So as of now, we have covered 4 sections, guys, along with some basic concepts. So this is all about the revision of chapter 1, people.